Hello and welcome back to the notes. Well, the story of the week really boils down to this chart, the remarkable course of the renminbi during the week. We discovered on Tuesday that it had had its greatest devaluation against the dollar in more than 2 decades. That led to great fear across the world that there was a huge devaluation coming. Subsequently, we had a series of interventions to prop the currency back up. Very clear words from the People's Bank of China, which we have to trust for now, that they're not interested in a major devaluation or in allowing the currency to go into free fall, but that they are trying to stabilize it as a level where they're happy for now. The result was that after very much volatility, most markets around the world ended up roughly where they started. Now, there are exceptions to that. The US stock market was slightly ahead for the week. European markets, such as Germany, more affected by China, and obviously Asian markets tended to be somewhat worse. You saw also a very slight ticking down in bond yields, which is in line with the general idea that the chances of a rate rise by the Fed next month are slightly down. Now, in terms of what we have to look forward to next week, there will be a raft of inflation data, obviously most importantly from the US, and also housing market data, which will feed into perceptions on the chances of a rate rise for September. Perhaps critically, there will also be the Fed minutes from the last meeting to look forward to. Plainly, there is a chance that there will be a clear hint there as to what their intentions are for September. Perhaps most importantly, though, we need to take a look at what you could call the reflation trade. If we take a look at another chart which compares the price of oil with emerging market currencies, these are linked, evidently. If you're worried about deflation emanating from China, then emerging market currencies will weaken, and so will oil. You can see that both are in a sharp downward trend. Brent actually was up very slightly for the week. WTI, the main American benchmark, was down very hard this week. If we see a continuation of this trend, that will put more pressure on the Fed not to raise rates. It will show continuing deeper concern about China. For the time being, that's possibly the single most important aggregate to watch, apart, of course, from seeing if something changes once more with the Chinese currency. Watch the oil market, watch emerging market foreign exchange.